All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for January 6th, 2025. First episode of the new year. And we are recording this at 1 p.m. Eastern Time. And this is episode number 461. So today I've arranged for Norman Hallett to join us. Uh, and also, Norman will be back on Thursday for a special event with us on timing research. So we'll talk a little bit more about that later. And also, the option professor is here to moderate. So I'm going to turn it over to him.
Okay, thanks, David, and welcome everybody. Today we have Norm Hallett with us, and he's going to go over the markets, and he's going to go over some of the different ways he helps people regarding their trading. And so, right now we're just going to start out with the S&P chart, Norm, that you got up there now. I think you were saying that it's kind of at a very important juncture. What are you saying?
Yeah, thanks. Thanks for. I'm so glad to be with you guys again this year. And this is going to be I believe, an exceptional year for traders as we try to figure out what the influence of MAGA and the broken Democratic Party is going to look like as they shift all around. But the charts always tell us what to do if we're cool enough to to read it and not put our own influence on it, what our own wishes. And this is a very interesting chart. This is the daily chart of the S&P, and I was looking at it for about 10 or 15 minutes before we started today because I knew that we would be commenting on this, and it really jumps out at me a few things that especially. I mean, the bottom line, I'll give that to you first. We're in a really, I think, a very critical number of days now as we formulate the first week or two of the market movement and what we're going to see at least through the month. First week, I always find is an important week for the month. Doesn't always happen, but it does have a minor influence. I mean, what we're looking at here is an uptrend, right? I mean, a really nice rolling uptrend that is giving us everything that we want until now. Because now, if we isolate this from November on, we've been moving really in a sideways market, but with power on both sides I mean, these don't look like big moves, but they are in here. And of course, this one was a major move that everybody was talking about. But there's a lot of big bars here in a very short period of time. Usually these are, I find that when you get bars of this strength, they usually lead to follow through for sometimes an extended period of time, but we're not seeing that. We're really, here's a bar that led to something nice, another bar that was kind of limited. But when you see them this big, especially something like this, I'm looking, it makes you want to look for continued downside. So here's a few lines that I've drawn this line, which I think is an important line for the short term. It's a simple tops line that really gives me the bottom line thought that we need to do something here. We're up against this line, which a lot of day traders would be looking on the lower term charts for some sort of a response on the downside as we've hit this line today and coming lower. This is one of our loaded gun signals, as this one is on the short side. And when I talk, what we're looking at here is an indecisive string of days, almost 2 weeks here, where you had a defined movement, really rupturing a number of these long positions, as well as this uptrend that looked like it was going to be a simple correction. But once we passed a certain point in this downturn, we really washed out. But we haven't broken the uptrend from the standpoint that we have here now, a low, another low, and now we're playing around with deciding what we're going to do. So this is an important line, I think, for the short term. I'm seeing a couple of our triggers that are saying focus on the short side. This is the 8-bar exponential moving average here, which I believe is it's the queen average. It's probably, I believe, the 8 or 9. People can argue with me about the 8 or 9, but I like the 8. It's a little quicker in its and it's the ETA, which focuses gives more weight to the more current bars when you're looking at the exponential moving average, the EMA, not the ETA. I have a friend coming in on a flight. I asked him what the ETA was. So I guess that's where but so you've got a number of things I think that are saying watch for some downside here. But you always got to be careful with that, because when you've got a strong uptrend like this, look, trends rule. And to turn a trend around, it's going to take some time and some action. And we're seeing that action right now. We've got, traders probably smarter than me would be looking at this double bottom um, and saying, hey, we've double bottomed against a test of the recent low to maintain the uptrend. We're moving higher, but it's not convincing. It's not convincing to me, because I've learned that when I get what we call a loaded gun trigger, which is one of our loaded gun triggers. This is one of the main ones where you have indecisiveness passing through the 8. This incidentally is the 34. I won't comment on it here, but we use it to stay out of trades that we're thinking about getting in, and staying in trades that we're out, so we don't get shaken out. But when the moving averages are together like this, these are points of decision. And so I'm showing you a number of things here. Tops line that's used by a lot of traders. The older you are as a trader, the more you're going to be using tops and bottoms lines. What we could be, if I drew this line down here, we'd be looking at a pennant forming as we move out in time. And I think that's where I would be. That's where my vote would be for what's going to happen this week. I know it's always our initial question, where are we going this week? I think we're going to have a sideways type of a week. You can look at all of the things going on politically, that we're changing hands there, all of the things that will later define us as we move out of the transition phase, and keep us in stasis before that time. So, from a story standpoint, which I don't give much credence to, in fact, I try to ignore, to a technical standpoint, I think this is going to be a sideways type of action. When will we finally get our correction from this uptrend that's been with us for weeks and weeks? One of these days, I'll figure out how to take out that this is a week from this is last year. But when will that finally come? Don't know that this is going to be enough. We may play around here, but I am looking at the short side in the short term for this month. But we'll have to see. What I'm looking for is not important. What the chart is telling us, and the chart is telling us right now, they don't know. I think the market really doesn't know where it's going. What's your thinking on this option, Professor?
Real simple. 60, 70, 60, 80 is an extremely big resistance. And we went up there today and we failed. So I would be shorting the hell out of it up at 60, 70 this morning, or buying puts on stocks. And then, of course, if it goes above that level, get the hell out as fast as possible. Because I've got moving averages and they're all coming in at that number. Mm-hmm. So I think this jobs report is it. If the jobs shows that, look, the JOLTS reports are dead. The temporary hiring is gone. Hiring new people is at a 2014 level. Ongoing claims are at 37-month high. This is like Mike Tyson's legs are going, and all they need is one bad unemployment report, and then everyone's going to realize that 70% of our economy is based on consumer spending. They're defaulting on credit cards at the highest rate since 2010. So I'm not bearish here, but I am definitely on the sell side until we get above that. As far as being big bullish, you can do your day trading and you can do your this and that, but I don't think you can do we're going to 6,300 until you close above 60, 50 on the cash, 6,100 on the S&P. Okay, so that could happen on a good report that would be bullish on Friday. But, I think you have to be cautious, like Norm's talking about, until some of these levels can exceed and be sustained. Do you see it a little bit like that, Norm?
Yeah, I mean, I think you've described what I was trying to describe in a different way, or what I described in a different way. I mean, this is kind of messy because you're getting strong signals in each direction. In the back of my head, I'm always saying, respect the trend, respect the trend, respect the trend, and certainly this action here, the fact that you can have a bar like this without follow through on a daily chart, that's pretty rare. It really shows you the strength of this upward conviction, but not enough to break to new highs as it's been doing. I mean, there is some distance here. There's some time. One of my mentors in early days just always talked to me about time, how you can really see how these moves are measured to a large degree. Of course, Elliott is much better at looking at that kind of thing. But if you're looking at something like this and then an equal moment here, I mean, we're in a moment in time, as you say, that, and I do agree with the 6,100. I mean, it's the top here. It's the bottom of this accumulation. This right here is going to be an area and it's already tested once. We've tested it in a minor way today without any follow through. So yeah, I think that if you're going to speculate at all right now before we have a defined chart, I think you've got to be on the short side and you got to be light.
Well, and if you want to get some long exposure, which I did a couple of weeks back here, is SMH. These guys have got NVIDIA, have Broadcom, and Taiwan Semi is their main guys. When these guys came back to work today to start buying stock, these are the ones they're buying. Okay, so if you want to have exposure with limited risk, I said to myself at 240, if you can put it on SMH, at 240, 245, I mean, if I'm going to buy some options, if I'm going to get long something, I'm going to get long this thing. Yeah. Because I can have limited risk down here at 240, 245. And if these markets are going to go, what's NVIDIA going to go down? Broadcom's going down, Taiwan Semi, Google, Microsoft, they're all going to be tanking? No, of course. So if you want exposure, I thought this was the way to go. And so far, it looks like this is where the money is going.
Is that today's move, that breakout shot?
Yeah, that's it. But you can see if you have any kind of moving averages, there was a traffic jam between 240 and 245, and the trend is up, and the RSI was at 50 turning up. So it was a real gimme.
Yeah, and
I see that as a gimme. Come on, look at your gold lines there, your blue lines there. I mean, you're not going to get a affidavit of guarantee.
Well, if we close above these recent highs,
yeah,
you talk about old school. That protractor thing I always talk about, where you put your pin in the breakout area, and then you go all the way back to the 1st of October, where this accumulation started. And that distance, if you make that horizontal distance vertical, you're going way past the recent high, which makes the recent high a real doable thing. So yeah, I mean, I like this. Are you doing options in this?
Well, like I say, and this is the other thing. You look at it now and go, "Oh, I got to get in." Listen, when you're doing buy side of options because you want limited risk,
Mhm.
you got to do it when it's time to do it.
Right.
In other words, at 240 and 245, the premiums are lovely. At 262, they're jamming. So you can't just go in anytime you want. You got to shoot the ball when the shot is at the most desirable.
Well, you even
Is this kind of what you were talking about, Norman?
you did you who drew this? Did you draw this, David? I mean,
Yeah, this is my
you've
chart.
even done it in the shape of a protractor. It's
Yeah.
exactly what I'm looking at.
I figured
Favorite.
TradingView might have something like that in there.
Yeah. So, this would be a target that I would be
Yeah.
comfortable with if, especially if we break this high. But the test of the high is, looks to me that
Well, like
is,
I say, buying the stock and putting stops under 240 and going to bed, that might be the thing to do. And then when you wake up from your deep sleep, it's at 334. That would be lovely.
yeah.
Now,
Let me ask
hey,
you.
listen, what would make it go there? The Nvidia goes to 180. What do you call it? Taiwan Semi's at 240, and Broadcom is up at whatever it is. It's not a mystery what would make it go up. The 35% of the index is the three companies I just mentioned. So guess which ones I keep an eye on?
Yeah. Well, what has been the move in the option premium? I
It's
mean,
just like it's been a double, triple already.
I see.
That's why I'm saying I'm not saying people get in there now with the options because the train was waiting for you between 230 and 245 for weeks and weeks and weeks. And if you refuse to get on the train, unfortunately, it's already gone to Boston.
Right. Once something's for sure, it's
I mean, that's my feeling. You could buy it here and it could go to 334 and you're a genius. I don't do that kind of thing because I'm trying to make sure that my risk management is in line. So, you know, obviously if you're a momentum trader, you might be saying this is a perfect time.
New traders would be looking um, at similar stocks in the same field and seeing if they've broken out already, looking to kind of have that happen too now that this is gone, which is usually a
Well, I mean,
dangerous
I
way of
look at
looking.
Nvidia. That was another obvious thing at 140. Put up Nvidia, and you'll see another. Again, it's not coincidental. The index is full of Nvidia.
Mm.
So, in other words, if I think the S&P is going up, do I think Amazon and Google and these other stocks will probably be going up, and Apple? I do because they're a heavy weight of the index.
Well, what was it? 50% of the movement
There's
in
like seven of them, right?
50% of the movement last year, the percentage gains last year in the
Yeah.
S&P was from the Magnificent Seven. I read today.
Yeah. And, if you're bringing in $1 billion of new capital, because that's the kind of money going into these markets, are you going to try to buy General Motors maybe? Or, I mean, you're going to probably go with the guys who have big return on capital, big margins, big revenue jumps. That's where you're going to put the money.
Right.
And those companies got it.
Well, let's say that somebody did have the foresight to gut it up and get into the boy. It didn't take much guts with the Friday's action. Uh,
Well, I can tell you what took a lot of guts lately, and that's buying energy. So if you want to put up something like Halliburton
yeah,
or, the energy, and the energies are starting to pay off because, again, energy is not going down to $60 a barrel. It's on its way towards 80.
yeah, it's been doing well. I've been trading the crude. In fact, one of the things that I've
Well,
always
yeah.
recommended, incidentally, for you prop traders out there, I'm going to be going through on Thursday um, some of the do's and don't do's for prop trading when it comes to picking the right contracts, because in prop trading you're always concerning yourself with the red line and they make that tight. These prop firms, they're treating you like a professional trader, and if you're somebody that doesn't follow rules and doesn't take note of what of pullbacks in your equity, you're not acting like a professional. And one of the things that I always hear prop traders complain about is how shallow 2% or 2.5% drawdown is all that these prop firms will allow. And it takes a different way of looking at things. And one of the things that I just wanted to offer to traders a particular contract with it's the QM, it's the half contract of crude oil, which is a great way to trade crude when you're concerned about drawdowns. I'm a believer that you should always be taking, as a prop trader, two contracts at one when you initiate a trade on a good trigger, and therefore you can treat one as a quick gain, as a scalp, and the other one you can let run if that were to happen. And that kind of attitude, when you take scalps and pad your distance from that red line, this is the way of the successful prop trader. And so when you mentioned energy, I couldn't help but take a look at the fact that it may be ready, right? I mean, look at this chart right here. You could draw that tops line and see that you break out from this area. You've already had one attempt today that tailed off, but by the end of the day, that tail may be filled back in. This is what often happens when tops lines like this are looking for breakouts. I mean, this is going to be a quick move to 78 if it breaks, and not going to be, but the highest probability. And if we break that, 82, 83 is an area that we go in. And the crude chart looks very similar, not exactly, but those kinds of breakout points are going to match, I believe. And some say the stocks follow, you're lag behind the actual product, and some say it's the other way around. But certainly, this stock is going to respond to the price of crude oil. So the QM contract, that's kind of my bottom line here for people.
Yeah, on the crude, my feeling is that you're coming right into the resistance zone around 74, 75. If you can get above 77 and 82, then you're going to be looking at everyone going, why didn't I buy all those oil stocks? Because they will start responding, I think. But right now, this is the easy lifting, more so between here and 75, the easier lifting. To stay up above here, and to get above 77, 82, much more evidence needed. And so I would be very cautious up here at 74, 75 until it shows me you can close above that level. And then once above 82, I think you're kind of home free at that point. And, you could see $100 crude under certain circumstances.
Mm-hmm. Yeah, you could. I think that's a little strong. But again, it's a minor probability, but certainly going to be there. There's the reason why right there.
Oh yeah, exactly. Yeah.
Because now if you take this accumulation, you can see where we can be at. We can get crazy prices. But with what's going on in Ukraine and Europe, as far as now depending on their own for oil. And not getting it from Russia and so on. It's going, crude is going to be in the news. It's going to continue to be in the news. So yeah, it's a good market to be watching.
Well, and the demand side is a key also. I mean, China is stimulating. They want to get things going. They, what do you call it? In Europe, they're dropping rates. Here, our GDP with all these things Trump's supposed to do is supposed to be really strong. That sounds to me like a lot of people on the highways, a lot of people using energy. And if that's the case, 40% of the demand comes out of China. If China starts kicking in and these guys haven't been producing, Trump's saying drill, baby, drill, but, there's no concrete plan on that. And so we have to just see. But, if the world economies don't go into recession and they ease their way into, and don't forget emerging markets, I think the two of the areas that are very cheap. Obviously, I thought energy was cheap. I thought the SMH, the techs were cheap. I think now the agricultural products are very cheap, and the emerging markets and overseas markets, because everyone has sold off these foreign markets because of the strong dollar, and Trump is going to come in with a big whip. Now they
Mhm.
just announced in the Washington Post that he's already kind of watering down the tariffs. And if he doesn't come in with the really wild tariffs, and everyone has gotten short because they thought he would,
Right. Right.
they're going to cover. I mean, put up EEM and put up, some of these foreign, they've all sold it down. And
Right.
it's right on. That's where I love to do business. It's on the line. It's either going to tank or it's going to bounce off of there, right? It's not going to stay
Absolutely.
at that. It's not going to stay at that line forever, is it?
No, and look at the way the moving averages are. What am I looking at? The 200 and the 50?
Yeah, they're
Yeah,
converging.
yeah,
Yeah,
250,
you know,
Never a
50
better
and
time to.
200
Yeah,
EMA.
yeah.
oh yeah, right. I didn't want to leave this session. We've got some time without, as you know, I used to be solely in the option business, but when I hear news like U.S. Steel,
Yeah.
that's just front page the last week, and it's going to continue to be. Will they be able to, be bought by the firm, or will they reject, that foreign influence because of concerns about safety? Uh, is this the U.S. Steel chart? Can you bring that
No,
one?
uh,
Emerging.
do you know what the symbol is?
I don't, but
There's X. It's X. X.
it's
X.
X, yeah,
Oh, okay.
yeah, I guess.
I follow some of these things.
Well, this, and what I'm trying to say is when there's potential here for a real pop in this market, disappointment that one way or the other, and when you get the moment when you have the time of indecision, which will suck the energy from the premium, that's the time to inspect where you want to go. What do you see in that? Is this going to be an opportunity?
My opportunity on it would be at 38 when it's in that little zone there, and they're going to make a decision, and you can do a strangle for very low money, and then you could buy a 40 call and a 37 put or something, put up a fixed amount like $3, and if it drops down to 30, your three goes to $7. That's my idea of a good time with this kind of thing.
There's a lot.
Right now, I wouldn't touch it because, again, you could obviously if you had anything to do with it and you thought it would go through, you'd probably get some kind of call action. But when I'm looking at the calls going 3 months out,
Yeah.
I'm looking at the stocks are trading at $31. Okay, if this thing's going to get bought out at 40 or 45, can you explain to me why the 33 calls going for $3?
Right.
And I
Well,
say to myself, I can explain it because I think they think it's not going through.
that's it. Listen, you mentioned strangle. There's a lot of traders out there that hear these terms: condor, strangle. Strangle is a simple one to explain. Can you give?
Yeah, you know why I like simple? Because I want 9 million legs to try to figure out where I think the market's
Tell
going.
people why
Yeah.
a strangle would be good if this thing
Strangle's a
was
good
big.
thing because it's limited risk and it's got unlimited potential. That's the reason it's good. Now, why it's bad, you got to buy two options. So you better buy them at the right time, which means you have to buy them when the volatility is reasonable. There is going to be an event coming that's going to move the market substantially. And then you have to buy enough time to make sure you're in the game when these events occur. So obviously, when I do them around earnings, I make sure that my expiration date is beyond the earnings announcements. So again, that's the good news about strangles. You're buying a call and a put at the same time, and you're saying that it's going to be volatile enough, up or down, to make enough money on one side to make the fact that you lose on the other side irrelevant, or not
Well,
irrelevant, but not punitive.
right. So we used to say the beauty of the option is that you can only lose what you put in, but no more. And your upside is if you just buy a call or buy a put. In a strangle case, you're buying both sides. So it winds up that what the art is at that point is to when to lift one side. or if you lift it at all?
Well, I mean,
How do you
that's the
look at
art on
that?
everything is when to trade them out. So if you want to talk about that real briefly, first of all, putting them on is very important because if you get in at a bad time, you're going to be in a pickle the whole time. So that's not a good thing. So first thing is do it at the right time. And my suggestion and what I try to do is to buy them when I think the options are cheap because I used to sell thousands of these things. So when I went to the buy side, because people generally don't have the kind of money to be sellers, really, realistically. That's why they do these iron condors with 75 legs, and what do they make? They make
Right.
enough to get a cheeseburger. Anyway, uh, yeah. When you buy them, you got to. When do these guys on the sell side get in trouble? When the premiums are low, because I've been on the sell side and got in trouble. The premiums are low. You think nothing's going to change, and then something happens and the markets move big. And that'll happen sometimes around Fed announcements or substantial changes in economic numbers or
Mm-hmm.
unemployment, or it could happen with earnings. I mean, earnings is a report card. You bring your report card home to your parents. Everybody thought you got A's. If it comes out as C's, that's a problem. If everybody thinks you're a C student, but you actually worked that quarter and it came out as A's, that's a problem. And
Right.
problems are not discounted because the words implied volatility are very simple. What is the implication of what has been happening?
Mm-hmm.
If nothing's been happening, the implication is it's going to keep not happening,
Mm-hmm.
which means it's extremely incorrectly priced if something's going to happen. And that's the key to the options. Implied volatility.
There you go. Yeah, it's a good answer. Listen, the more, I don't know if keeping it simple is because I'm getting older and I don't want complication, or
Exactly. Yeah.
whether it's just the best way to trade. And I think it's both.
Yeah. Yeah. A lot of stuff you do are a cut to the chase thing. I don't think you go with 19 different legs, calendar spreads. I mean, I know all those things. I mean, for God's sake, it's been my thing for decades. I went to the Options Institute. They trained me in this stuff. They didn't let me go crazy without training. So the bottom line is that I know all the strategies. That doesn't mean you want to use them all.
Mm-hmm.
And
Well,
again, you don't want to gravitate to a strategy for only one reason. Like I
mm-hmm.
wouldn't do a strangle just because it's cheap. I wouldn't write options because most of them go to zero, and that's
Right.
really where you go into the abyss as far as taking, your lack of experience and knowledge and driving into a bad neighborhood.
Well, I mean, listen, trading is all about putting the edges on your side. And,
That's
I
what we
always
try to
start
do.
with the longer term charts, look at the weekly, look
There you
at the
go.
daily.
There you
And
go.
if there's a definite influence there, if they give me a direction, when I move to my short term, because I'm out at the end of the day in day trading, I favor the side that the longer term, what I call the undertow, is giving me. And it doesn't mean I won't take a trade the other way. It means that when I'm calculating my position size, I'll go stronger when I'm going with the undertow. I go lighter, and that's really worked for me through the years. These are the kinds of edges I think that only failure followed by another
Exactly.
failure, followed by slapping yourself in the face and saying, "Hey, this has a meaning." And then all of a sudden succeeding, and you say to yourself, "Why didn't I just do this all the time? Why was I fighting what I knew was correct? Because somehow, I thought I was better than what I was reading."
Yeah.
Um, so
Well, let me show you an example on Tesla. And let's go to a long-term chart and go like through the sequence that me and
right.
Norm are talking about, so you understand there's a reason why we do this. Okay, because I deal with a lot of obviously individual investors, right? So a lot of them come to me and go, "I got to get into Tesla options. I got to do Tesla." I go, "Listen, let me tell you about Tesla." Okay, first of all, it is 9 miles away from its moving averages. If you wanted to do Tesla, you wait for it to give you the time to do it, which was obviously between 220, 200 and 240, maybe right around
Yeah.
there. That
Yeah.
was your neighborhood where it made sense to go into your reserves and take a shot.
Mhm.
Now, if it goes up like this, you are being rewarded for taking the shot at the right time. Now, if you go up here and you start getting into it at 500 because he lives at Mar-Lago, and you forget the fact that their year over year sales of automobiles were dropping this year.
Mhm.
In other words, they sold less cars this year than last year. And he's running around trying to get SpaceX going, and he's running around trying to get the battery storage going, and he's running around trying to get many different things going, X going. And the point being is that this is very risky up at 480. Very risky. The premiums are huge, and it has a reversion to the mean potential. And so that's what would make me say, go elsewhere, look elsewhere.
Look
But
elsewhere, young man.
now go to the 5-year graph. Actually, go to the
That
1-year
that
graph.
is the 5-year.
Okay,
Yeah.
go to the 1-year graph, and I'll show you where I told people if they wanted to get in, this would have been the place. And there was a drop on my 1-year graph. I have a drop that came down to 340, like this drop down here to 340.
Mhm.
And that was right against a moving average that I had. So I said, if you want to try it, you try it here, but you ditch it fast if it breaks. And they got another run out of it. Now, down here is a neighborhood again that I told people 360, 380. That's a neighborhood because you've got a net. Think of yourself as the flying Bandini brothers from the circus. They would rather be doing risky stuff at 360, 380 than doing it up at 500 because they got a net.
Mhm.
And so now you could get another bounce, which is what you've had. But I'm not really interested in this company from the standpoint of the options because they are very expensive and you have to be very particular when you do them, or else you'll be buying a very expensive option and being caught. And I'm not in the business of buying $4,000 options hoping they go to 5,000 or $200 options hoping they go to 250. That's not my game. So this is
I've
not
got a
what this.
Tesla. I've got a Tesla question for you,
Yeah.
Professor. You're wondering why. I wonder when I hear Elon Musk talk about dropping the incentive, the tax deduction for buying electric cars. You'd think that would hurt him.
No, it wouldn't because he's got a lock on the situation. It's going to make his competitors harder to
Yeah,
get in.
yeah,
So
that's
that's an eliminating. This guy is very sharp. I'm not a fan of him. Because I think subsidies and starting all these electric credits and getting everybody excited about cars that look like that SUV or these driverless taxis. Would you want your CEO living at Mar-Lago trying to fix the national budget? I mean, can you see Lee Iacocca going down there? So he's either the
may
most
he rest
brilliant
in
man.
peace.
He's either the most brilliant man who's ever lived, which is very possible, and he's the leader of the new wave into the future, or it's going to be one of the biggest train wrecks since
So
not that
what you're saying is that the elimination of the credit will dampen the industry, but he's already the leader, and it's
exactly.
going to keep his competition under the umbrella, under his umbrella, literally.
Yeah.
And
And he's going to get China because him and Xi are close because he's the only one who's allowed to own a factory in China. You think that's coincidental? And I'm sure he's working Trump down in Mar-Lago, and then he's going over to Beijing and working Xi. He's good friends with Putin. I mean, this guy is trying to be like the big broker all around. But if you notice, he signed a $1.6 billion deal potentially with some lady from Italy over the weekend while she was visiting Mar-Lago. He's trying to make sure that these guys who come in on those visas continue to do so because they are essential to that, where the reality may very well be he's trying to protect cheap labor.
I asked the question to kind of heat you up a little bit, like you just did, because it kind of heats me up when I talk about it. But this is where traders go wrong. You can see the genius of what Elon Musk is doing, and you want in. You want in on this stock. because as soon as these moves start happening, it's going to fly. To wait till equilibrium, to wait till some of this gets back down to a reasonable moving average, is very hard for traders.
Well, that's why 360 and 380, a guy who's drinking hot coffee could have actually bought.
Yeah.
A guy who's drinking, Jack Daniel's straight for 10 days, he's buying at 500, hoping it goes to 800. He could be right.
Yeah, I just think that, for traders, this is where they go wrong by buying and understanding the story and really getting it right. Maybe you'll see, but going with the odds on the story and wanting in now before the chart tells them to come in. This is the biggest one of the biggest problems that traders have. This lack of patience. But I think traders have to understand that what we are talking about is already in the market. It's maybe not fully in the market, but it's already old news. What's
the PE ratio on this? Got to be 100 or better, right?
Yeah.
So in other words, that's the evidence that some of it's in the news is the PE ratio. I mean, NVIDIA's only got about a 35 PE ratio on forward-looking earnings. Mm-hmm. And they've got a chip everybody wants, not sales on a truck that's dropping year over year or on cars that are dropping year over year. So that tells you, I mean, like I say, this guy is fantastic as far as, getting things, getting money out of the government and getting people involved in a movement into electric without even knowing where the filling stations will be, or if the battery's going to explode, or if the battery's going to last or not last, or if the materials that make the batteries are going to go through the roof and ergo the battery costs more than the car, all kinds of variables.
Right. He doesn't let the small stuff bother him.
Exactly.
And everyone is on for it'll all get figured out. It's all going to get figured out.
I think it's one of the greatest stories of all time because it's either going to be you were looking at, the Pied Piper, or you're looking at Jim Jones, or somewhere in between.
Or somewhere, right.
But I don't think it's going to be flat. This guy's either going to be the way it works, and he's going to be the guy you should have followed ever since he left his house, or he's going to be a guy who got everybody into an extremely overvalued thing. And again, one of his risks is more people get into his business, and then his margins have been coming down. Margins coming down. Used to be 30% margin, used to be 25, used to be 20, down to 16, 15. I mean, the margins are coming down. Anybody who owns a business knows your margins coming down. That can't be good. And his sales are down year over year.
Well, but he thinks long term. I mean,
I know,
he's coming out. He's coming out with a car now, if it hasn't already, under $30,000. Now the margins they're going to suck. He may even lose money on those cars in the beginning. But what he's doing is he's locking up the brand. He's like, more Teslas on the road, the better.
Hey, listen, he's locking up a lot of things by going to Beijing and Mar-a-Lago. He's locking up an awful lot of things. And he's now looks like he's the head accountant for the United States of America. And he can also tell people how to vote. And if you don't vote his way, he can take his money and go after your opponent and make sure you get kicked out of office.
Yeah, this is the scary part,
And, he is a very, that response to Bernie Sanders, I'm not the political guy. I don't care who does what. But the bottom line is that Sanders mentioned the fact that most of these people who come over don't have these hugely expert jobs. They're doing menial jobs that many Americans could do. And then he came out with this F-bomb, which I was very surprised at. And it tells me, I don't know how things are going to work out. Nobody does. But would it be shocking if things didn't work perfectly smoothly?
No.
Listen, when you're dealing with unprecedented, it's hard to make predictions.
Well, you've got a thinker like that. That's probably the best in this century, and you've got empowerment technically coming in the background. You've got hydrogen energy somewhere going to happen. Solar will get better, and you've got AI. You've got
quantum computing.
quantum computing. That's what that octopus looking thing that to me is really going to be, that's going to be the answer to a lot of ills in the next generation or two.
Yeah.
But a lot of stuff happening, and I think to be a trader out there, I know you're listening to this because you're a trader. You're in the right place, but you have to control yourself.
Yeah.
There's
going to be plenty of volatility. Don't kid yourself.
Yeah.
What you want to do is try to take advantage when the volatility subsides, when you get a reversion to the mean, and you still think the story's intact. That's when you want to take your shots.
Well, yeah, you're right. And you have to have I love listening to you because you always have an educated plan before you do something. And if the plan doesn't happen, you have 3 or 4 plans out there, and whichever plan happens is the one you're going to take. You're going to let the market come to you. They say in selling that that you don't beg, you attract. You're not there to sell, you attract. And I think in trading, listen, you don't have any power over the market, but I think that your power is to make an educated plan and allow the market to come to you. That's where the winning comes from. But when you do something else, when you're letting the market control you, sure, the market can tell you, can give you an indication, a breakout, and so on, and you can put your protections in. But the best trades come with a plan that you have, an educated plan beforehand, and that you let the market come to you, come to your plan, and then you execute. That's where the big money is.
And NVIDIA gave you 2 great chances. One when it went down from 140 to 90, and recently when it went from 150 down to 130, 125.
Look at the plan here. If I was sitting in November of last year and I saw this sideways accumulation and I did my protractor thing saying, hey, this accumulation between July and November, if it breaks out, I've got a target that I want to take a look at. And I look at 50% of that target. Well, if you did that here, not only did it give you the perfect target at around the 500 level, but it also gave you that 50% interim target. Yeah, you're going from what I'm looking at. Yeah, I mean that's.
Oh, I did it backwards.
Yeah, actually, you're looking at the accumulation from July to November, and that sideways movement, same kind of thing that you drew before. That actually that second circle where it ends should be down at the end of the accumulation in November, right before the breakout. Just come down on the down into the left. Yeah, right.
This one?
Just give me a horizontal line. Yes, bring that circle down even further, so that it's hard. That's good. I mean, you get the starting point a little bit high, but my point is that right there. Bring it up. Bring it into. To make it horizontal. Yeah, that's it.
Oh,
so
you're like that.
Yeah, there you go. And you're seeing that. Yeah, that's it. If you have equal, you have a horizontal line. If that vertical line was of an equal distance, you'd be right at that 480. But my point here is that this is the way I plan. It's an old school plan, but when you have a breakdown, it's nice to know from an educated and an experienced level what you're expecting. And you're making my point here. So this is where real money is made. Where could it possibly go? Well, possibly go according to this to 480 to 520, and that's exactly where it ended up. Where it goes from here, that's another measure. But look, you came down to the moving average if you were patient enough. And if you were a buyer looking for a spot, and that spot was Friday. Is this a daily chart? Yeah, that spot was Friday, and you made a little money today. So, yeah, all good.
Yeah, and that drop came because of the earnings were announced. Where the car sales were not as much and that kind of
thing. Right. The first time and whatever, or actually the second time, but yeah. But again, he's got a company that's going to be a big part of the future.
He's Captain Kirk.
Yeah, I can't wait for the stock split, which is coming, I'm sure.
And everyone's going to do that hello sign like Spock used to do with the fingers, right?
That's it. No, I'm one of the few people that can do that. I must have Vulcan genetics. A lot of people can't give the sign.
Oh, God. Well, anyway, we're near the top of the hour. Let's talk about what you can do for people, and I'll try to explain what I could do for people and take it from there.
Well, I appreciate it, and I also appreciate everybody sticking around today. We got a little pontification, but I think it's important to really grab a background of what works and what doesn't in trading. And you know, I've been very into prop trading because there's so many traders out there that start with $5,000 and $10,000 and are using probably money they probably shouldn't be using. And somehow, you know, you can make 50% on $5,000 if you're a good trader for the year. And what do you got? $2,500. It really doesn't change life. But when you're looking at the possibility of controlling hundreds of thousands in prop trading money, if you follow their rules, and get 90% of the profit, that's very attractive. So it's brought in a lot of traders who are not familiar with the way professional traders think. And the way professional traders think is I mean, you've said it 3 times. If it doesn't work, get out quickly, get the hell out right away. We don't wait. You know, we don't wait to be very wrong. It's okay to be wrong, but but it's not okay to be very wrong. And so trading, when you only have a 2 or 3% drawdown possibility or parameter, you've got to think differently. And in my presentation on Thursday, I'm going to talk about some of the ways that professionals think in order to stay within those bounds. Because the great part of prop trading is that when you have a funded account and you start making money with it, if you let that profit extend without taking it, you now have capabilities to really move bigger. That's when the fun really starts. Most traders don't get there because they're tripping over pennies to get to the dollars, they say. But I find I'm coming out with a book this quarter on their money or profit, the prop trading explosion. And I think that will really give people an honest view of what's going on. And honestly, I love it if you're willing to act and train like a professional trader. It's in you. You don't have to be a genius. You don't have to even be the smartest person in the room. You have to be the most controlled person in the room and the most disciplined person in the room and just follow simple guidance. So I'm very excited about what I'm going to be presenting on Thursday. It's a new presentation that I think especially prop traders and those that are thinking of trading somebody else's money is going to get a lot of good from. So if you can be there. I think David will give you a bit more on that if you follow his emails.
All right. Well, thank you, Norm. And as far as Option Professor, it's pretty simple. We've got 3 things that we have called the options alerts. And with the options alert, you get a options class, 6 hours of comprehensive information. You get option ideas that I send out every Sunday night. And you get coaching where you can ask me questions and I can go over my opinions and my views on how to trade these options and help you with your trading. So you get education, ideas, and coaching. And the whole price to get started is $297, which is a joke. So invest $297, get educated, get some ideas, and get some coaching, and start out 2025. And let me show you how I can help you with your options trading. David, I think you got some kind of a link up there.
Yes. Yeah, it's in the chat.
All right.
Here.
And then basically, if you have a question, you give me an email, optionprofessor@gmail.com or professor@tradingindicators.com. Shoot me an email, say, Jim, I have a question, or Jim, I wanted to talk to you. Here's my number. Call me, We'll set up a time. We'll get together and I'll show you how I can help you. If I can't help you, God bless you. Go on your way. If I can, welcome aboard. So
yeah, I mean, out there, I maybe step on you there, but I have to say, listen, I was in the option business. I ran one of the largest option firms 30 some odd years ago. And so I usually laugh at some of the option gurus out there, but the option professor I can laugh with, which is a big difference. So, if you're looking to trade options, exactly what is this $297 offer?
Well, again, for 90 days, you're going to get every Sunday night a email with the different, well, you get an overview on all the markets. So I give you my opinions. Then I go over ideas that I think are going to be good. And that, of course, includes strangles where we're doing both sides, but also long-term options.
Mm-hmm.
And then you get coaching. Again, you get 1 hour coaching for free, costs $200 generally. I give it away for free. The options course costs $397. We give that away for free. So you're getting a lot of free stuff. And at $297, come on, after 90 days, you're going to have a great idea whether this can be a long-term help. You're going to be a lot smarter than when you came in the door. And you go out to dinner. I mean, you're with 3 people. Unless you're going to McDonald's. I mean, I just been in New York for 3 weeks. I couldn't get out of anywhere for $400. So spend $397, get going, get educated, get some ideas, and get some coaching. And I think you'll be very happy you did.
Love the idea.
All right. Well, let's send it back over to David at the top of the hour. Norm, Happy New Year, and we'll be talking again throughout the year.
Okay, take care. Great to be here.
All right, thanks, guys. Great discussion. So, yeah, for everyone listening, be sure to join us on Thursday for this special event with Norman. The title is Three Huge Challenges to Prop Trading Profits. So he's going to be talking about that and how you can some information about how you can get funded on prop trading. And that will be on TimingResearch.com on Thursday.
4 p.m.
Sorry, Thursday, January 9th, 4 p.m. Eastern Time. So you don't need a special link or anything. You just come to TimingResearch.com and there will be a link to join the room at the top of the page. So be sure to join us for that. So also just a reminder, this this recording will be posted on TimingResearch.com today as soon as possible. Also, you can search for Timing Research on YouTube, Substack, and your favorite podcast app, and get the recordings that way as well. And so I just want to thank my guests again for today, Norman Hallett of TheDisciplinedTrader.com and the Option Professor of OptionProfessor.com. Thanks, guys.
Thank you.